Hello everybody, my name is Alesh Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my weekly thoughts on market happenings for the week ending December 3rd, 2021. The indexes for the week all had significant swings up and down during the week, both for the stock markets and for oil. All US and Canadian major indexes, as well as oil, are down for the week, mostly from the Omicron COVID threats, the rising inflation, and worries about rising interest rates. The Q3 GDP data for Canada on Tuesday said that GDP grew at 5.4% annual rate, far over the 3% expectation, which is great news and will likely accelerate the interest rate increases in Canada since the economy is running hot. And higher interest rates will be used to combat the inflation and it will not harm the economy. The Omicron virus has shown up in the US, scaring investors. There were 8 cases as of Thursday night, all mild. And over the weekend, a third of all the states have had Omicron occurrences. The consensus seems to be, however, that Canada and US won't shut down this time because of the current vaccines should be effective in preventing serious medical results and because of the quote unquote relatively high vaccination rates. The Biden administration is tightening travel rules to and within the US, requiring all inbound international passengers to test for COVID within 24 hours of their departures and extending mask requirements on all domestic flights and public transportation through March 18. Fed Chairman Powell hinted that inflation may be more permanent and persistent than originally thought, and tapering of the bond purchases might end sooner than thought, perhaps, quote, a few months sooner. The market then assumed interest rate hikes will begin sooner in the US as well. It indicates that the economy is in good shape, which the market somewhat ignored. Any travel and trade restrictions will increase the supply side inflation, hampering logistics. The US bond market, in fact, is pricing in a 30% chance of a March US interest rate hike. We had US job numbers on Friday. One of the conditions of the US central bank raising interest rates is full employment. The initial jobless claims on Thursday came in below estimates at 222,000, which is good. The non-farm payrolls, however, on Friday rose by 210,000 positions, less than half the median estimate of 550,000. The increase was the smallest growth in job creation so far in 2021, but did little to alter expectations for faster tapering. While the economy added just 210,000 jobs in November, the unemployment rate dropped to 4.2%, its lowest since February 2020, and wages increased. 4% unemployment is usually seen as full employment. Now, Canada's employers trounced hiring expectations for November. Almost 154,000 jobs were created in November. That's 4 times what the economists expected. And the unemployment rate sank to 6%, putting it near pre-pandemic levels. Meanwhile, hours worked hit the highest level since before COVID-19 overwhelmed the economy last year. All Canadian banks have finished reporting and they are all buying back shares and increasing dividends, thereby improving their share prices. OPEC will be increasing production of oil, impacting the price negatively. Turning to Canadian consumer debt, there is 2.2 trillion in Canadian consumer debt in the latest national tally, based on Equifax's latest quarterly update on consumer debt levels in this country. 2.2 trillion compared to 2.15 trillion in the second quarter is what we've arrived at in the third quarter. While mortgage growth slowed sharply, the average size of those loans climbed year over year, and sequentially to approximately 360,000. The credit monitoring firm also noted there was a jump in credit card activity, particularly among young adults. The average price for homes sold in Canada's largest housing market, Greater Toronto Area, climbed to 1.16 million last month, marking another all-time high for the GTA. Sales inched up year over year as inventory collapsed. China continues to be a risk on two fronts, threatening Taiwan and in the political struggle with the US, where both sides are threatening to make all Chinese ADR stocks like Alibaba, Tencent, Baidu, and JD.com go to zero or at least delist. The other geopolitical interesting spot is Russia, which is threatening to invade the Ukraine by massing troops near the border. Next week, we have several interesting events. One is quarterly earnings, which are mostly over in Canada, are still continuing in the US. Tuesday is US and Canadian imports and exports. Wednesday is Bank of Canada interest rate announcement, which is expected to be held as is. And we also have US oil imports and inventory. Thursday is US jobless claims. The highlight of the economic calendar next week will be Friday's November core consumer price inflation data. The US CPI accelerated 6.2% in October, the fastest annual increase in over 30 years, amid a global supply chain crunch, and is forecast to rise 6.7% in November. That is something to look forward to. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.